everyone. Today is Friday, October 9th, 2020. My name is Evan. Welcome back to our weekly stock market analysis video. If you're brand new to these videos, welcome to the channel. Welcome to the series. We break these videos up into two parts. In our first part, we're going to review everything that happened this week. We're going to look at performance sectors, volatility, market internals, and really sort of pick apart everything that stands out and kind of put things into perspective. And then in part two, we're going to jump into the charts. We're going to take all of that data from part one. We're going to look at the longer term trends. We're going to try and make some sense of the action and point out some opportunities looking ahead. So hopefully that sounds good. We're going to jump right into it today. And I do want to apologize. I missed our Wednesday trade ideas video. Missing videos is something that comes far and few between. I had a tremendous amount of technical issues on Wednesday and just did not get around to publishing that video. So routine trade idea videos will still be going out on Wednesdays, but we missed this one here this week. So let's jump into some of the headlines from this week. We got breakouts across the board this week. It was basically a bull parade to the upside. We saw the biggest Russell 2000 move since June, and we get the VIX back to the low end of its recent range. We're going to talk about that, all of this throughout this video. So let's kick things off with some performance numbers here. You can see strongly positive numbers here across the board. Look at these 1 week numbers for the Dow Jones, 3.27%, 3.84% for the S&P, 4.18% for the Nasdaq, 6.36% for the Russell, and international stocks 3.14%. Very, very solid week all around. If we look at market internals, we bounced back here aggressively as well. Take a look at the number of stocks, the net number of stocks hitting 52-week highs this week. So we basically look at the net number each day, and then we sum up that 5-day total. And I think this is the largest number we've seen since the recovery, since the March lows. 623 net NYSE 52-week highs made this week. We can thank, of course, that breadth, that participation from small caps, really kind of pushing that number up there. Cumulative AD line up at 3,800. One thing that I will point your attention to is this last row, though, the percentage of stocks over 20 SMA here in the S&P 500. That number's up at 88%. So that's a pretty high reading. So of course you got to keep this in context here and sort of know your time frame. But in the very short term, this market is quite stretched and probably vulnerable to some type of pullback, pause, or reaction lower. So let's keep that in mind. But all in all, especially when you look at some of these numbers and this chart in particular, it is very encouraging from an intermediate term perspective, the breadth and follow through that we got this week across markets. If you look at this chart, remember we were worried about this chart right in here, and this is why we do these videos. That's why we look at our data every single week, and we try not to jump to strong conclusions one way or the other, right, until there's an actual trend developed. But we were identifying this slope right in here as it started to roll back and start to downtrend, and we basically said, look, if this continues to trend lower, then this market is going to be in trouble. We're going to have some issues if we see the number of new lows getting picked up and exceeding the number of new highs. This was back here 10 days ago, 2 weeks ago, and you can see that was basically the low, and we have this rocket ship that basically developed here to the upside, and we're getting a nice ramp to the upside here in the number of stocks hitting 52-week highs. So that is encouraging to me. It's one of the most bullish things, in my perspective, looking at breadth, looking at 52-week highs. This chart in particular is something I like to see, and this is encouraging. Again, for the intermediate term, in the short term, we could easily still see a pullback here going into next week. If we look at sector performance, this again reaffirms sort of the breadth participation this week. We saw every single sector in the green this week. At the top of the list, materials, energy, and utilities. Pretty curious bunch there. That's not tech and everything else. Tech was number 4, so it was still pretty. It was still pretty strong, but it wasn't kind of your usual suspects. On the downside, all still positive, but we had real estate, communication services, and consumer staples up 1 to 2.5 If we take a look at volatility, volatility came out of the market this week. We saw the VIX across the curve drop from last week's levels. We do notice, though, see in this front month here, it's rising up on a relative basis here to the 3-month, and now that we have the election in the front month option contracts, this starts to make sense as the market prices in fear. Although, as much as that may be true, if we look out here, you can still see that there is a good amount of fear and essentially protection being bid into the 3-month as well, which would bring us in towards the end of the year, really the start of 2021. So, there is still a case here where there is the market is still pricing in, volatility and uncertainty even after the election. So I think that's interesting, but I think overall, net here, it is positive that we see the VIX falling across the board this week, although it is still, of course, historically elevated levels at 25. If we look at interest rates and credit markets here, we basically saw yields pop across the board. So bond prices falling, yields rising, investment grade bonds pretty flat on the week, and high yields here also rising. So again, encouraging action for the most part there. It's kind of what you'd want to see in a traditional market: stocks up, bonds down, as risk on sort of takes center stage. That hasn't really always been the trend. In fact, there's been probably more cases, although I'm not 100% sure on this, but I think we've actually seen a lot of rising together bonds and equity markets throughout this year. And so, we're starting to get a little bit of the flip action, throughout this past week or two. If we look at dollar and commodities here, the dollar basically fell across the board, and, that largely can speak to and largely influences lots of things, not just commodities. So you can see all commodities were basically up this week as the dollar is down pretty strongly. 1% on the dollar index is a pretty good move. And we saw, gold, silver, agriculture, crude oil, natural gas, everything here appreciate, and stocks up as well. So in the last 2 weeks or so, when we saw more market turbulence, stock turbulence, the dollar had been rising, and so we're finally getting that unwind here in the U.S. dollar for the past 5, 6, 7, 8 days now. So if we put it all together, we look at the report card. It's basically check marks across the board. The volatility environment is still, from a historical perspective, still at an elevated rate. So we'll give this an A-. Can't get the full A, just given a 25 VIX is still kind of not normal, but it is, obviously the normal that we have here in the year 2020. So good marks there, lots of encouraging action. If we finish off here with our allocation, so this is our MERL trading strategy portfolio. You can see basically still fully invested, basically still leaned into this market and buying up risk and all the like. The difference here, though, so the one slight change, and this is actually the 25th. Let me pause this. I didn't update this slide. Give me 1 second here. Sorry about that. Here is the correct chart. This is October 9th. I think that last view was a couple of weeks old on our positioning. So this week here, you can see this gray sliver. It's only 5%, but that's gold miners. And gold miners are something we haven't had in quite some time. We did trade them back, I believe earlier in the year. We had some trades in gold miners, certainly over the past 6 months or so, but we haven't had any in a while. We did take some fills in it earlier this week in gold miners, so we are seeing some signals, some opportunities there based on this algorithm. And again, this is looking out slightly more intermediate term, so it's not a very, it's not something for the next couple of days. It's something for the next, 2 months or so. So I think that's sort of interesting. Otherwise, everything else here is basically dominated by biotech and technology outright, little utilities, a little financials, but really it's still tech. So that's the positioning. Again, if you want to see more information about the strategy, you can head to thetraderisk.com/Merlin and learn more about the strategy there. Take it for a 14-day free trial, and we'll be back in just a minute with some charts. All right, we're back here. We've got TC 2000 open. We've got our equity market grid we're looking at. That means that price itself here is the white dashed line you see on all these charts. Our custom smart trend filter is the colored dots here. So red, yellow, green. That measures price and volume and helps us get a sense of trend and trend strength. And we are looking at a weekly period, weekly time frame across these four charts. So if we first just kind of point out here S&P and the Russell 2000, top left, bottom left, you see that both of these indices went neutral on this weekly time frame for these past 2 weeks, and you can see that changed this week back into green, back into bullish territory for both of these markets. You can see even a little bit of separation here on these dots for the Russell 2000. That is actually significant. It's not just it doesn't just spacing doesn't happen for no reason. That basically, says that there's some urgency here, that there's increased momentum. So that is encouraging there for the Russell. S&P kind of just chugging along to the upside. Both of the Nasdaq and International just have stayed positive here on this longer term outlook. No changes there. If we go down to a daily chart, so we get a little bit closer on the price action, you can see meaningful changes here as well throughout all of these markets. So this week, basically on Tuesday, I think every single market except for the Nasdaq just dancing to a little bit of a different beat there, but S&P, IWM, ACWX here all went bullish on the daily chart this Tuesday of this week. So we got buy signals on Tuesday of this week for each of these respective markets. You can see price continued to move higher throughout the week, and we're getting consecutive kind of bullish signaling now back in all of these markets. So that is encouraging. Nasdaq 100, you can see actually went bullish back here. So this was a little bit earlier last week, Wednesday. We got Wednesday and Thursday, we got two bullish readings, and then we went neutral for a little bit, and now we're back to our bull setup here. So all of these markets now have kind of alignment here where the daily chart and the weekly trends are all pointing to the upside. We've got essentially buy signals, green lights across the board. Now, again, that doesn't speak to the very, very short term. So let's get into that a little bit. Let's go to some candlestick analysis here for the S&P 500 specifically. I'll go down to a daily chart. This had been the roadmap. This is the roadmap that we've been using here. We've had this stiff resistance at 3,400. We've failed 4 times here. So a couple of times back here in September. We had this abrupt turnaround on Tuesday, and then we kind of springboard higher here Wednesday, follow through Thursday, and more kind of follow through in higher prices on Friday. So we broke out from 3,400. We did it pretty meaningfully and aggressively. That is encouraging to just see the consecutive sort of gap and go sessions. We essentially gapped up and just moved higher Thursday, did the same thing on Friday, and that was after the strong close on Wednesday. So that is, the urgency, the speed, the imbalance there is all constructive here to see for the S&P 500. 3,400, just as it was significant resistance here for the past couple of months, that's our line in the sand now to the downside. So this is the area now where you want to see the S&P continue to hold above 3,400. You want to keep this market acting as healthy, as strong, and as pent up as possible. You want to see price stay above 3,400. That doesn't mean we can't come back and retest it. We just want to see buyers, essentially step in, support the market, and bid things up into pullbacks or into weakness into this area. That's certainly how I would interpret this, this price action, this chart. So, that is the bullish development there in the short term. Above here, there's not a whole lot of prior supply in here. I mean, we had this, straight shot up here at the end of August, where we just kind of ripped to these new highs in the S&P 500. We didn't kind of chop around a whole lot, and we came slamming back down, of course, in early September when this correction started. So there really isn't a whole lot of other sort of price resistance. I really am looking, all the way back up to here. I'm not saying that we have to get up here, but this is just the next relevant target. There's room to sort of just float higher here if the sellers can't actually, bring us back down and start, bringing us back below 3,400. So it does look like, This area here would be where I'd be paying attention to, is up around 35.80 or so. Again, that's not a prediction that we have to get up there. Now, one thing I do want to just point out again is that we have covered a lot of ground in a pretty short order. So we're up 8%, almost 8% in just a few weeks' time now. We're up 3 days in a row pretty aggressively. We're up, let's see, 6 out of the last, or what is this? 5 out of the last 6 trading days. We're up here, so we've covered a good amount of ground. We looked at the fact that the that the percentage of stocks above a 20 SMA here in the S&P 500 is up around 80 and change, almost 90%. So that's pretty high. And if we sort of flash forward here to the VIX, you can see the VIX is actually back to the low end of its trading range here that it's been in for the month of September, since the past couple of weeks now. And this is sort of the same thing we said on Tuesday. So on Tuesday we had our midweek analysis, and we did our recap, and we basically said, look, the VIX is back up at 30. It's at the top end of the range. That's where it's been failing. If you think this time's different, then you don't want to potentially put on any shorts or pick up equity exposure. But if this is going to turn out to be a point that it's been in the past few weeks here, then you're kind of selling the upper end of the VIX here around 30, and you're buying volatility, you're buying protection, or you're selling some stock back here when VIX gets around 25. Until and if that changes, that's sort of that's what's been working. So eventually that'll change. Maybe it's this time, maybe it's not. But it's kind of the same thing we said on Tuesday. So now, the fact that we've covered some ground, stocks are pretty bid and pent up here in the short term. So if you want to be a little bit of a contrarian, maybe you're selling some stock here, booking some gains on into Friday of this week, or you're putting on some protection, or you're hedging a little bit, or if you're aggressive, you're outright shorting. Again, all of that comes down to strategy and execution that goes far beyond what we can really discuss in these videos, but it is something to be aware of here, is that, in the very short term, if you're trying to play for all the little wiggles, that's something to keep an eye on. So that covers VIX and S&P. If we go to the Russell 2000, this is the standout here. This is really stealing the show across, from all the other markets. This is up now, it's pretty much in a straight line, 15% off of the September 21st lows, 24th lows. So you're talking 11 trading sessions. We've covered about 14% ground from low to high here in the Russell 2000. We got our meaningful breakout above 159. That's where we went sideways back here in August. And if you look all the way back here to March, you'll actually see, or I guess this was the end of February, right? End of February, when the markets, of course, started to price in and come to the new reality that is COVID, and we started to gap down and accelerate lower. We had these open gaps here. Now the Nasdaq and the S&P and the Dow have already filled all of theirs, but the Russell 2000 is now finally the last of the indices to arrive back up here, and it's into the gap right now. And it would close around 160, let's call it 166. So basically 4 more points of upside would basically fill that gap. So again, don't say we have to get up there, but we're looking at about 1.5% away from where we currently are trading. I would say with this momentum here, it's probably a logical spot to see us, maybe even gap up on Monday into this gap here, and maybe we start to fail or falter as we get back up and to these prior all-time highs. So let's keep that in mind as an upside, kind of last ditch effort here in terms of momentum. But it should be said, regardless here, we are quite stretched and sort of overbought to the upside right now. We've covered a lot of ground. So again, pausing and pulling back and all of that stuff really does apply here to the Russell. And it's good to see the Russell acting well here. Something we really just haven't seen in consistently anyway for most of this recovery. So that's certainly what helped this week. We'll talk more about some of those sectors in soon in the next part of this video. If we look at the Nasdaq 100 last here, you can see that this is still arguably kind of the most sluggish of all of them. Again, it doesn't look bad by any stretch. It's still, in fact, behaving very well technically. We got a breakout over 280. That occurred on Thursday. We got some follow through Friday and a nice strong close here. We're still about, let's see if we can kind of figure out where we are from the all-time highs. We're about 6% away, so another 6% rally here gets the Nasdaq 100 back up to its prior highs from early September. So maybe that happens, maybe it doesn't. But for now, I think just like we interpret the S&P 500, staying over 280, in the short term keeps this market acting as healthy as possible. And that's what we'd want to look for. If you're on the bullish side of this market, you'd want to see us maintain over 280 here in the Nasdaq 100. Volume was pretty light over these past few days. It's something that probably wouldn't be seen as ideal, but price is first and foremost the most important indicator for us as technicians. So that, I think, covers all of what I wanted to say on major markets. Let's go to some of the other areas of the market. You can see, let's go down to a daily chart. You can see LQD credits trying to get back above its trend. It's been basically bear trend here for since August, trying to get back above there. That would be healthy. You can see J&K did that this week, so that is encouraging. You want to see the corporate bond markets, kind of get back up into good standing here. That does, generally kind of bode well or help reinforce what stocks are doing. You can see VIX losing its trend here. Hasn't gone bearish, but still, getting back below its trend filter there. You can see TLT still is suffering here. So it tried to, about 2 weeks ago, get back up here and start to resume this trend to the upside, but it really did fall this week as rates rose. And, basically nobody wants to own bonds right now when you have the Russell just going up 2% every single day and the US dollar falling, and of course maybe more stimulus coming. So all of that sort of playing into the negative sentiment here in TLT. Longer term, let's go to the weekly chart actually. Yeah, so weekly chart, you can see this is still in neutral territory. In fact, in the prior sort of direction here on TLT was bullish. So again, the bulls are just barely trying to hang on here. It's going to be tough if we see another down week in TLT. This probably goes bearish, but it's still not out. It's still not willing to sort of give up a lot of the longer term direction here that's been in play for TLT. If we go to commodities next, and we look at weekly charts, so gold, silver, neutral, daily charts, you can see both of them kind of popping back over their daily trends. Still haven't been able to produce buy signals here, so they're still suspect. Gold is still kind of guilty here until proven innocent. Same thing for silver, so we do need to see more confirmation, more price acceptance up at these levels. So you got to be cautious here a little bit, but again, you've got a longer term trends at your back. The shorter term, we're still just waiting to turn up. If we look at oil here on the daily chart, that did turn up this week. So we've seen some big price swings in US oil, USO recently. And you can see basically on Wednesday it went back to bullish trend. That's constructive. DBC, commodity ETF, went back to bullish trend early this week as well on Tuesday. That is constructive as well. If we go to the sectors, if we look at sector analysis here, go to the daily chart on our sector grid, and you can see very quickly now there is a lot that is back to a buy signal. You can see tech is, communication services just turned up Friday, discretionary is, real estate is, energy is not, so we're still yellow here. Financials bullish, industrials bullish, materials bullish, biotech bullish, healthcare bullish, utilities bullish, staples bullish. So all of this has been basically turning up over the past 5, 6, 7 days. We started to talk about this in our Tuesday recap, basically saying, look, there's lots of mixed signals here. Things are trying to turn up. Price action still undecided. And certainly by the end of the week, we saw that bulls clearly won this latest round of tug of war. So that's encouraging. Lots of sectors there. Let's dive into a few of them. We talked about XLU as being one of our favorites last week, or just really sort of highlighting the encouraging action we saw. And you basically just got more stampede here in utilities. This is a total straight line to the upside, resolving or sort of in motion of breaking out of this range it's been in for 5, 6, 7 months now. Maybe not that long. How long is this? Yeah, about 6 months. It's been basically going sideways. You can see it's making new closing highs. It's still well off of the highs of the year, but still utilities certainly extended here in the very short term, but trying to, rotate and break out and resolve higher. I think that's encouraging. Semiconductors breaking to new all-time highs. There's not many sectors right now that are back at all-time highs. Semiconductors is one of them. This isn't, maybe not should be a surprise, or I don't know what the right terminology is. When we did, sort of highlight this way back here when it was the fastest to, if you remember way back on this day, I think one of the takeaways of our videos was that the semiconductors here never made new lows when lots of other sectors broke to new lows, and they took out this pivot here from early September. Semiconductors never did that. That was one of the first and early cues at this. They ran up into resistance. They were one of the first to kind of break out. They did stutter step a bit, but here they are now breaking at new highs. So that is encouraging. Again, short term, they are quite extended, but lots of strength there. Biotech getting the big breakout this week. So 137, this zone in here, which we have been, kind of looking at and paying attention to and putting on the radar. That happened on Monday. We saw this big expansion higher here, breakout move in Biotech IBB. Same thing with XBI, patterns a little different, but basically you got this nice expansion higher here in both biotechs, and they are working themselves higher. That continues to be very constructive. In healthcare, which is more of a broad sort of biotech, kind of being the more specific, sector, if you will, within healthcare. You can see healthcare kind of getting back up here. Weekly chart kind of shows the picture of it looking pretty good, actually, from an actionable standpoint, and some more potential rotation. If we look at the downside, I mean, it's kind of the usual suspects. Now, both of these were up, but energy, again, just on a relative basis, these charts look very different than everything else we're looking at, right? So energy, of course, still had a positive week. They're still off of the lows. They broke this immediate term downtrend, but still, on a relative basis, still pretty severely lagging and kind of lots of overhead supply. Same thing for financials. I mean, financials here again did well this week, but on a relative basis, look how far they are from these all-time highs. We're still talking 20% away, or really, to rally back up to those points, they got to make over 23% to get back up to where they are in January of this year. So there's lots more to repair. Clearly the beaten up areas like these two could continue to bounce, but structurally, technically, they still look, from a longer term perspective, a lot worse than lots of other areas of the market. And while I totally am aware of the value, potential value plays that some of these sectors and companies might attract in terms of valuation and attention. So that's it. That is kind of what I got going on this week. There were lots there to sort of chew on and to think about. Basically, lots of constructive action here across the board, no doubt about it. Stocks in the short term quite overbought and frothy, could be due for a little bit of a rug pull, so don't fall asleep on your risk management. But as long as those bigger breakout levels hold, as long as breadth continues to stay supportive, it's tough right now to be bearish on this market, and we'll see what the next few weeks bring, because of course we got the elections and everything else coming up. So that is it for me. Thanks as always for tuning in and watching. If you like these videos, do subscribe to our YouTube channel, or you can follow us at The Trade Risk. As always, I'm curious to know what your takeaways were from this week. What were you paying attention to? Did I miss anything? Anything that you find important out there that wasn't said here? I'd love to hear them in the comments below. Have a great weekend, and we'll see you back here next week.